Thank you so much, and a very warm welcome to everyone here. It's a pleasure to be here, and I hope that this session has been useful so far, the event so far. We heard from Abhinav in the last session on how the right technology can make a substantial difference to NBFC growth, to making it grow successfully, sustainably, and profitably. We also heard about the compliance challenges. In a nutshell, bringing order to chaos is at least half the battle as far as technology is concerned. That's one of the key motivations for people to invest in technology. NBFCs especially have been very adept at blending technology, product innovation to make sure that new asset classes are created. You are able to reach new customer segments which hitherto may have not been someone who had access to the right credit at the right time. And technology has definitely played a major role in NBFCs being able to do that well. Which is what brings us now to the matter at hand, digital lending, an area where we can see exponential growth, targeted and projected right up till 2030. But again, an area where there are significant headwinds, an area characterized by multiple players, be it lending apps, lending platforms, NBFCs, banks, so on and so forth, as well as regulatory scrutiny that has gone up. On one hand, to protect customer interest, at the same time to make sure that credit underwriting standards do not drop. There is adequate oversight on credit after disbursement, so on and so forth. And again, this is an area where technology plays a major role. I think with that, we'll start a panel discussion. Just a quick round of introductions, although I know the moderator did do that. Mr. Alok Aggarwal, of course, is the Chief Executive Officer for Muthoot Home Finance, and he's been a veteran in the housing finance space from his early years, having worked with Equitas, with Magna Finance, as well as with Fullerton. Again, all of that in the housing finance space. Samir, of course, looks after digital transformation and PMO at Hero FinCorp, leading the digital lending space. And of course, Dr. Ravi Gupta, we have already been introduced to before. Now, just to get the discussion started in terms of where we see the digital lending space evolving, opportunities, challenges, what are the key drivers that you have seen in the last few years, Mr. Aggarwal, and how do we see this space evolving over the next couple of years?
Yeah, hi, good morning, everyone. Thank you. So, as we speak on the key drivers, over the last 1 decade, we have seen a lot of changes in the entire NBFC, housing finance, and in fact, the BFSI sector towards the digital solution offerings. So, the key drivers, according to me, one is the evolution of the technology itself. Over the last 1 decade, the number of technology solutions which have come, which were not even thought about earlier, has led to a significant change as to how we do business. The second important driver is the digital penetration in the country. The technologies like mobile penetration, access to data and internet, which is present today, was not somewhere thought or heard of a decade ago, which gives the ability for the general mass and the population to access services digitally. These two are the more of a demographic changes. Coming specifically to the sector, there have been a very progressive regulatory changes. We should be thanking the RBI to be so progressive in its thought approach. The advent of things like UPI payment systems, the advent of account aggregator systems which we have today, have enabled the banks and the NBFCs to go forward and offer technology solutions. Parallelly, within the industry, the rise of fintechs who have come one step ahead to collaborate with NBFCs to help them offer the solution has overall increased the marketability, penetration, product offering. So all this together have been the key growth drivers for the industry.
Samir, would you like to add on to that?
Yeah, good morning, everyone. Pleasure to be part of this exciting topic. So, I'm just adding to Alok. So, he has rightly touched upon the what I call as the digital maturity of our economy. So, we are at a very right cusp where we are not only talking about the financial services being digitized. There is a lot of infrastructure at large which is getting digitized. Whether you talk about health, you talk about other services, government services. We have examples all around. Whether it's Aadhaar, whether it's UPI, whether it's your e-Sanjeevani and all those kind of projects. All are definitely at a different maturity level, but all taken together are giving that push to the consumer side also to bring in that kind of a digital adoption. So, it's not only one side that can keep creating the products which are digitally or tech savvy. It has to be other side also which is ready to consume that in the right shape and manner. And just taking the example ahead, so while we have already seen a revolution recently with the Trinity of JAM, and with the latest evolution, I am more than confident with the new Trinity that has been formed with respect to the JAM, UPI, and ULI. So that's a very recent one, and I'm definitely eager to see what it can bring to the ground. Because while it has solved for various critical pieces, especially the data points, your data availability, the authenticity of the availability, and obviously bringing overall structure to the entire protocol, to the entire kind of API mechanisms and everything. So that brings a trust to the customer, that brings confidence coming from the regulator itself, because a lot of DPI stuff that is today coming directly from the regulator, it gives that trust to the customer. And if we keep balancing out the fraud and the mules and everything, then obviously it is the right stage wherein all these drivers will keep it pushing it forward only. Thank you.
Sure.
I think the previous speakers have highlighted about the rise of UPI, the rise of the digital public infrastructure, and rise of digital India, rise of government to business, and government to citizens, services in digital formats. So overall, the digital ecosystem in last, I will say, 5 years has grown exponentially, and which is like making the customers comfortable in doing digital transactions, online transactions, online counseling on various services, like they're accessing various options where to have like cheaper loans, or online the verification of their documents. Like these are the small things which are changing in the ecosystem, which were not imagined, I will say, just 5 years back, which is like making the digital adoption, and I will say digital lending also smoother, which is helping the ecosystem. Yeah.
Fair. One thing which usually goes a little under the radar is how the regulator has been flexible in allowing different business models to coexist, right? Digital lending especially is an area where innovation has broadly been fueled by RBI, not putting on any roadblocks there. What we are seeing now, however, is a focus on not dropping credit standards coming to the fore as far as the regulator is concerned. So digital underwriting models, especially at the point of a credit decisioning, has again become a very important topic when it comes to credit sanction. How have you seen that evolve? Is that something where there's been progress made substantially over the last few years to reach a point where credit decisions are taking into account multiple other factors from what was traditionally the case? How have you seen that evolved?
Sure. I would agree with you on the initial part. We have had a very supportive regulatory framework which has enabled both banks, NBFCs, and housing finance companies to proactively adopt digital usage in their day-to-day operations. Now, specifically coming to an underwriting piece, today digital interventions have helped the underwriting piece change in totality what it used to be earlier. It is completely a new dimension of underwriting, and the kind of information which is accessible to an company or an underwriter today comes from various formats and models. It can be the bureau, it can be the social media of the customer, it can be various data points of his telecom usage, electricity usage. We have data points from various fields which were available earlier but were not organized or were not accessible. So today when we underwrite a customer, we are more aware about so many other things which were not accounted for earlier. So if I were to give you a simple analogy, today digital underwriting is like the voice of the navigation, which tells you, go straight, turn left. So for a company, it is as good as navigating us and giving us directions to show us the right way. With the advent of underwriting in digital, our turnaround times have reduced considerably. We are able to communicate to a customer a basic go, no go almost instantly while the initial data entry itself is being done. It also reduces a lot of wasteful work on processing loans, which we may not do. And it also helps give a go ahead to the loans which we want to do much faster, which helps in customer satisfaction. It reduces a lot of operating cost, a redundancy of many staff. So overall, it has been a big, upswing in the way we operate and we cater to customer requirement.
Yeah. So, very rightly touched upon the formalization of this entire system and the democratization of the data information that today we have is actually giving that upside to the underwriting space, which we would not have thought earlier. There were days where you used to get all those bulky papers, starting from the your income tax returns to your GST returns, and then there is a whole lot of agony that the customer has to go through, and the sales people has to go through multiple times. And today what we are talking about is, just a click of a button. And in fact, we are fighting today the battle of how more frictionless we can make it, right? So why do even has, customer has to enter a password? Why can't it be kind of some kind of another authentication mechanism wherein it becomes more ease for the customer? So all that together, along with the alternate data, which we have seen products like merchant cash advance. We are talking today about checkout financing, BNPL. These products would not have been possible in itself if the alternate underwriting mechanisms would not have been in place. Today we are not underwriting a customer basis his bureau scores or something, but maybe on his payment track, which is he being a part of any kind of a super app. You know how he's interacting, behaving, the payment patterns. Similarly, for your MSME side, you have all those data points coming in, which tells you what is the kind of the daily churning that guy is having. If there is a drop, not a drop, or is there kind of a particular tilt towards a, there are different patterns that you can recognize today, and all that is possible due to the data and analytics that is truly available in its right shape today. So, this will further, I'm just thinking about different zones in future wherein what shape it can take, because today we are almost at real-time underwriting. So, let's see what it takes further to.
I will add it about it from the other angle, the customer's angle. Today, the customer is much more aware about his own data. His own data is organized, which was earlier on like in a paper format. Now he can see it on his app, on a credit app or any other app. His own credit card history, where all his CIBIL score is, and where all these things were earlier also available, but it was not as much organized. So the emergence of a new informed consumer itself has happened. And he's also like as much aware that what he's eligible for, what he can avail, what he cannot avail. So I think it's a much more informed consumer and a much more informed lender. Both have emerged.
Fair. I think the customer expectations have gone up largely on account of customers being more aware of what, let's say, they would demand as opposed to what's just available in the market. Coming for a minute from the underwriting to monitoring, right? In a digital lending, that might be more difficult than in conventional lending, right? So how does, let's say, or how have we seen credit monitoring post disbursal keep pace with the speed with which we innovate on underwriting, whether we are seeing the same pace of growth on the monitoring side, and are there more nuanced approaches to monitoring that are now coming to the fore?
Yeah, see, as digital advent has helped underwriting, and not only underwriting, various facets of lending today. So it is similar with the monitoring part also. First initial days, we all remember when we used to lend, we used to have those pre-printed check stationaries with dot matrix roller printers, and each customer being given a check. So how step by step things have changed. We moved to a online payment system, RTGS payment system. So the first point of check was the end use monitoring. Suppose I'm lending a home loan, I'm making payment directly to a builder's account. So I know the funds is going for what purpose. If I'm funding, I'm making payment directly to the seller's bank account. So right from that way, in terms of how we made our payments, the end use monitoring and the credit usage monitoring has improved quite a lot. Today, I am able to get online data if I'm doing a bill discounting or an invoice lending or a merchandise lending. I'm able to see where the funds are transferred, how the business usage has changed post my lending. I'm able to monitor it more digitally rather than once in a year, traditional way of visiting the customer and then seeing what has happened. So today we don't have to wait for a year to pass. Once the customer is onboarded, as and when his cycle moves ahead, we have today bureaus which we run parallelly post lending also every month, quarter. We see a trend of repayments, not only how he's paying to us, but how he's paying to his other lenders also. So if there is a sign of stress, even in his other payments, we are aware much ahead before he even has some stress with us. Overall, the monitoring has become easier. Monitoring has become something which we can track, we can document, and which we can engage with the customers. Today, our customer-facing apps or the website have various ways where the customer can interact with us. If he has a disconnect, if he needs some change of EMI date, EMI payment, his communication is much faster, and there is a lot of two-way interaction which helps in solving any customer service issue, which also helps in monitoring. So overall, it has been quite a journey which has evolved from the traditional lending days.
Yeah, so from a monitoring perspective, let me be upfront, it has been a turmoil in the recent times, and all those who have been on the forefront of the digital lending would have faced that heat. And I still remember, overnight changing the entire structures, getting into the understanding and the comprehensive of the regulation itself takes a lot of perspectives within the industry, within the company, and within the industry also you have different zones. So taken all together, but today when we look back to it, so one thing that we all need to respect is at the end of the day, from where regulator is coming is ethical lending, a responsible lending, and we all have to on the other side of it, the very major essence that is coming out of all this monitoring is to protect the customer interest and to build that customer trust, which we just touched upon in our first interaction. So with digital lending, unfortunately, there is a huge surge in the negative side also, which is the frauds. The fraudsters are getting into unwanted or unwarranted space, and that is causing a lot of trouble for all the kind of the innovations that are about to hit a scale but then face a deadlock. So that balance of keeping the customer interest and trust intact, but at the same time not getting the innovation killed. So that is I mean, still we are in that journey where we have to strike that balance, because today with the anything getting overheated, there is a immediately step up on the either of the sides. So which is not the right stage to be in, and probably one of the right way which we are also seeing in terms of RBI edge. So that is one of the very beautiful ways of moving ahead, wherein sandbox approaches are being extended to NBFCs, and we can co-create those kind of products. We can co-test those kind of products, and regulator gets a lot of confidence when it gets tested in their environment with their kind of layers around the entire ecosystem. So yes, so from a monitoring perspective, we have to get, and that balance has to be there with respect to innovation and monitoring the overall space.
I would be saying here that when, for example, government has access to all our data, our Aadhaar data, our income tax data, our financial data. Being getting that data production, that data is not lead at the wrong people is like very, very important, because this is very sensitive stuff. And similarly, all our lenders have all our data, and so that data production is like highly important. Number one. Second, that I think our last speaker highlighted about that keep the interest of the customer in mind. हो सकता है he's in trouble, so have that empathy. If he's like a genuine customer, like have the empathy, give him that space. Don't misuse the data and pressurize him. So that is my perspective from a customer angle.
Fair. I think, as you rightly said, Samir, on the regulation front, both with early warning requirements to be monitored, fraud monitoring, so on and so forth, balancing that with actually using metrics for, let's say, better customer pricing, blending that does become a challenge. Shifting our gaze a little to maybe competition. Now, digital lending as a space is, has many stakeholders, right? Not just NBFCs, but there are, let's say, lending partners, there are apps, so on and so forth. Do we see NBFCs coexisting with them? There is obviously an element of competition at points. Is it coexistence? Are there challenges? How do we see that evolving?
Okay, see, my take on this is today's world, we are, sitting in India, which is one of the fastest growing economy. Luckily for us, the segment I handle currently, housing finance, it also helps me because we are one of the most populated country in the world. So the market is very big, net, and it is growing at a good pace. There is a space for everybody. So initially, we just had public sector banks. Then we had private sector banks. Then NBFCs came along to help address a market which the banks were not addressing. Then we had small finance banks come across, which have also increased the market. And now we have the emergence of fintechs and other players who have helped the industry. So overall, from initial days till today, all this have enabled the market to become larger, market to become more resilient and operationally more efficient. They have actually helped each other out to weed out whatever the sloppiness was there. Today, the business models of co-lending exist. Business model of collaborating with each other are very successfully existing, where a lending institution is able to take an access or an approach of the technology solutions which may not be his core strength, but he is able to partner with the company and offer a solution to the end consumer. Similarly, a company which may not have a very wide distribution range or ability to reach customers is able to partner with a digital onboarding partner, sourcing partner, and reach a wider net of customers. And parallelly, the same thing is happening if they want to help in servicing a customer or providing a solution much better. So all in all, my understanding is that it has helped the industry. It has helped the industry grow further, and as I see it forward, it will continue to help industry and eventually makes the stronger footprint for the entire industry.
Yeah, so let us call it as a healthy competition. So this space, no one would have ever thought of going that granular kind of ticket sizes that you today see. You can even get 1,000 rupee loan also financed over an app. None of our traditional players would have thought of it because of operational constraints or brick and mortar constraints and all that stuff. But today, all these innovations, and rightly said, like with the advent of your fintechs and the microfin space, they have shown us how they can do it and do it at scale. Obviously, one area of leading this competition or being part of this space is definitely the partnerships with the right set of the fintechs, where we can collaborate with each other's strength, because obviously the parentage or the traditional learnings of a big house can definitely collaborate with the young innovative thought process of a fintech. On the other hand, one major area that we can also look at is the customer experience. So irrespective of whatever you are doing, what kind of a product you are building, what kind of a solution you are building, I personally feel that your customer experience will be gonna be your deal maker in future. Whatever be the space we exist, because today, as my panelists have already talked about, customer has also become enlightened. You, me, everyone sitting out here, are very much demanding today. No one earlier would have resisted from going to a branch for a loan, but today everyone expect the loan to get on a click of a button. So that change has already happened, and this is still evolving. And one of the exciting spaces, I am still waiting for Gen Z and Gen Alpha to enter this curve. So are we ready for that? And do you think that they are gonna compromise on the customer experience? The answer is no. So that will definitely be a ruling edge in this competitive space.
He mentioned about Gen Z, and I would highlight that, and everyone knows that even the people who are starting their jobs are having an iPhone, having a salary of like 25,000, and having a phone of a lakh or a 1.5 lakh, and loans are available easily. So I am like worried about a what do you call easy access to lending is having some negative effects on the society, and it is increasing people with lot of loans on their head, and at some stage, if the economy goes into like some trouble, the lenders have an implication.
Sure. I think just one last question before we conclude. Like you said, Samir, again, we have seen substantial investment on the customer acquisition and experience part. Customer experience is a deal breaker. Everyone understands that. What about technologies internal to the organization, right? Because while the customer acquisition part is absolutely crucial, being able to service it on one hand and also take care of a plethora of internal obligations, operations, compliance, all of those also becomes important. So how do you see that tech evolving to keep pace with, let's say, the balance sheet growth that will come with customer acquisition?
See, very truly said, every change or every positive steps has two ways to it. One is the benefits, what we see in the market growing, and other is the responsibility which we have to cater to. So just give you a small example. Today our regulator has been very proactive. So the regulator says you are doing so much data based on Aadhaar, but now it is mandatory to mask the Aadhaar number. So yes, we have to go back and find out digital solutions how I can mask the customer data Aadhaar, because it is a data point which is available right from front end when the customer is being onboarded. So basic things of regulatory compliance, like how do you put your house in order to come to the right spirit in terms of benefiting from the technology, but also catering to the regulatory requirement of data privacy, misuse of data, and going both hand in hand. So, the regulator now, you would see coming forward, is going to assign a prefix number for telecalling also. If you are a lending institution, all your calls will come from a specific 3-digit prefix number. So the customer knows it's a scam call or it's a call from a genuine institution. So all these compliances are being built by way where the negative impacts of technology can be avoided, and compliance and the more friendly parts of technology can be benefited to customers. So it is the responsibility of the institution to ensure that the compliance is done properly.
So on the technology on the internal side, definitely yes. There are a lot of stuff that happens inside the company, whether it's reporting the compliance, whether it's keeping your customer updated, or major operational processes that we carry. As long as we can standardize it, though I'm using this word very conveniently, but that is not that convenient, because all the products within the organizations happens to be at different maturity curve. But still, taking an enterprise view on the overall applications or the digital, while we talk about the digital maturity DPIs of the economy, I personally feel that your particular company or unit also have that thing. So it's high time we shall start looking at those kind of digital frameworks within the organization also, which is the stage of the digital maturity index that you are as a unit or as an entity. I mean, you might be a very good player, or you may be churning the top of the top lines and bottom lines, but there is always a space to kind of move ahead. And just to take this perspective slightly, I will extend it further. We are not talking about digital literacy, and as all the leading houses sitting out here, we shall also look at that space, because that is where my customer need to kind of why we are only interested in digital literacy of that customer. When it's the time of getting the EMI paid. Why that digital literacy starts from the point of PDM, pre-due management. Why can't it be beyond that? I mean, this is slightly larger in picture, but that will definitely help bring a lot of improvement in the overall space while meeting the technological advancements within the organization.
The time is already up. I will just add one line that scammers are like affecting the customers badly. Number one. Number two, the fintech influencers. They are the hidden heroes. They are influencing the lending pattern, buying pattern, every financial transaction patterns. So so these are the 2 points I will wish to highlight.
Thank you, panelists. I think that's largely what we have time for. Any questions from the audience? Sure.
Yeah, Deepak, we can have this. Please introduce yourself and keep the question short, please.
Hello, I'm Jaydev Mukherjee. I'm from Capsave Finance. I'm the Chief Compliance Officer. Only one thing I would like to add is that we have talked a lot about the digital lending and IT enablement. This is the Trades platform which has been fantastic. So far, we have generated almost 4 lakh crore of turnover in the Trades platform, where the NBFC factor, special class of NBFC, as well as the major banks are the lenders. So huge volume has been generated. So without mentioning the Fed's platform, I think the discussion will be incomplete. Point number 2 is that James Sahai, that is the government e-market portal. James Sahai is a cash flow based lending platform, and it is based on Open Credit Enablement Network, OCEN. So now the James Sahai 2.0 and the OCEN 4.0 is going to be launched soon. I think this is also going to be a big enablement and game changer for the MSME lending space. So I thought I will add these 2 points. Thank you.
Absolutely. Thank you for these inputs. I don't think we have time for other questions, but please, we are anyway here for the full day. Please feel free to catch any of us for any of the queries that you may have. Thank you.